Hello traders and welcome to this real-time supply and demand video. In this video we're going to talk about the benefits and application of using the supply and demand tool with trading the dollar yen. Let's talk about this market's vitals real quick. First of all, this market pair is the US dollar versus the Japanese yen. The ticker symbol is USDJPY. The pip value varies from, some brokers will let you go below 10 cents a pip, but it goes by 10 cents a pip to $10 plus per pip. So it goes in terms of micros, minis, and standard contracts. Micros are 10 cents a pip, minis are $1 per pip, and standard contracts are $10 per pip. Now, obviously, you can go as many contracts as you like, so you can go $100 a pip if you like, but so the pip value does vary. Now, it doesn't really have a cash open or cash close session per se, but the high volume times are from about 3 a.m. to about 4 p.m. Eastern time. The Asian session, we'll see a little bit of volume pickup, but truly where it really starts to pick up is during the London session and especially the American session. So that's a high volume times for the dollar yen. The night session is between 6 p.m. to 3 a.m. Eastern time, but this is also tradable as well. Important recurring events is the FOMC, Central Bank, GDP, world events, CPI, PPI, and non-farm employment. As a reminder, trading does carry significant risk, and all information in this video is provided for educational purposes only and is not an offer or recommendation to trade futures, stocks, options, or Forex. Some of the key features of this tool that marks zones or areas of extreme supply or demand automatically for you. Has the ability to customize to any chart type, any time frame, or any market, including futures, ETFs, stocks, and Forex. Here's what the tool looks like on the dollar yen on a 15-minute, but again, you can put this on any time frame that you like. But you can see these green zones down here at the bottom and these red zones here at the top. These green zones are the demand zones, and these red zones here, these are all supply zones. You'll notice the different colors. These red zones here, these dark red zones, and these dark green zones here are newly created demand zones and supply zones. So they're created, but they have not newly created, but they are created, but they have not been retested. So these light red zones and these light green zones that you can see down here, like in this demand zone here, is created here and then was retested here, and it goes to a lighter shade of green. Created here, retested here, so it changes to a lighter shade of green. Same thing here, created here, and shortly after that, retested. Supply zone here was created. Real quick move out of it and come back into it, and it changes the color here. Same thing here, just within a bar. It looks like it came right back and retested it, and it changed to a different shade of red. So really easy to identify. Up here you have a convenient button to go ahead and hide the zones or show the zones as you see fit. To go ahead and so make sure it doesn't affect your analysis, you can go ahead and hide them or bring them right back on. So how can this indicator help you with your trading? Well, the real-time supply and demand tool calculates imbalances from volume, blocks of volume, and order flow activity. Now, in the Forex market, the volume that it's using is tick volume or ping volume that it's using to calculate this. Now, it's not just important distinction here. These zones aren't just price-based. They are volume and price-based together. This helps you measure and visually identify key points within the market. Such as this is a couple different ways you can use the supply and demand tools as a trade setups and triggers the first one. So as we saw here, actually this demand zone all the way down here is a good example. You had the demand zone that was created right here, and the market moved out of it, and within just a few bars came back and retested it, giving us a great trade to go ahead and take advantage of. I'll go ahead and zoom in here so you can see exactly what we're talking about. So again, price came down, created that demand zone. We had a good move out of it. Within a few bars, 10 bars or so, we came right back, retested it, and then moved off here pretty aggressively. This is a great trade setup. You have another great trade setup up here. Right here, you have let's go ahead and zoom in here. You have the market that went ahead and moved down, quickly revisited it, gave us a nice shorting opportunity, and this was a beautiful, beautiful trade here. Again, another shorting opportunity here. Price came back and retested it. And this is another one here. It was created here. Came back out, price came out, retested again, beautiful trade to the downside. So that it can be set up as, using price action along with supply and demand as a trade setup and trigger by itself. Support and resistance. As you can see here, acts as really good support of a supply zone, came right back up and nailed it to the tick. You can see here, really good demand zone here once again. So a lot of traders, as a matter of fact, use it for support and resistance solely. Risk to reward analysis. So you can, once you take a trade here on the demand zone, you know exactly where to go ahead and put your stop. You don't have to guess or look for a key low or anything. You take a trade here, you know exactly where to go ahead and put your stop right below the box there. Pretty simple, pretty straightforward. Again, right here, put stop right there. Above the supply zone, put a stop up here. Another one here, put a stop up here. Really easy to identify risk and reward. And the tool calculates how many pips wide or high these boxes are. And it'll actually show that figure right here on the right-hand side of all these boxes. I'll show you how to do that. Sentiment. Very quickly, you can look at a supply and demand chart and identify sentiment here in the market. Originally very bearish, you can see very bullish now, but if you see a lot of mix of zones here, you can figure out that it is a range-bound market. So you're going to have to trade up, change your trade tactics to go ahead and adjust for that. So if you see a lot of red, it's a bearish market. You see a lot of green, it's a bullish market. See a little mix of both, it's ranged. Now let's go ahead and transition to the charts, and I'll show you how to set this up. So you want to right click and then go into indicators here. Go down to the NCAT RSD for real-time supply and demand. Go ahead and load that in and just go ahead and hit OK. And bam, there you go. It's loaded up and ready to go. Now you can hide the zones just by left clicking on this button, or you can right click on this and show the zones. So let's go ahead and talk about some of the settings. And as a matter of fact, we'll go ahead and move it over here just for display purposes. Just right click and go into indicators. Let's talk about the first setting here, extend zone minutes. So I set this out to 240 and I click extend zones here. As a matter of fact, let's go ahead and put this back here. So if I go ahead and put it out to 240 and click extend zone, click apply, you'll notice these zones will go ahead and push itself out, giving you nice projections here into the future. So you can go ahead and bring that back down to 0 and bring it back down to normal if you like. So no weak zones. If you want to see weak zones, you'll see these purplish weak zones here, all of demand zones here on the bottom. I don't like to see them, so I'll go ahead and take those off. Recolor retouch. So if you want these boxes to remain dark green or dark red, you can go ahead and click on that, and then they'll never change. So you won't be able to identify which one is retested or not. Recolor weak retouch. So if those weak zones that we talked about here, if they get retouched, they will go ahead and change the color. If you don't like that, you can go ahead, or if you do want that, you can go ahead and change or click to check this, tick this box here. Time frame type. Now, when I go to 15-minute, 10-minute, or 5-minute, you're going to see 15-minute supply and demand zones, or 10-minute, or 5-minute supply and demand zones, depending on the chart that you're on. However, a very useful feature here, if I change this to minute, and I put this at 60-minute, what this is going to go ahead and do now is give me 60-minute supply and demand zones on a 15-minute chart. So if I go down to a 5-minute or a 30-second chart, these are still going to read as 60-minute supply and demand zones. So it's like having two charts overlaid on another one. So it's doing all the calculations on a 60-minute and displaying it here on this chart. So that can be very useful. Otherwise, you can keep it on chart period. And every time you change a chart time frame here, go to 30-minute, you'll see 30-minute supply and demand zones, and it'll stay in conjunction with whatever time frame that you have. Data series setup and visual, you can go ahead and leave the same. Colors are just cosmetic. If you want to go ahead and change the colors here, you can certainly go ahead and do that. Draw text. So on main edge price is the prices that you're seeing here on the right-hand side. So 109.18, 109.40, it's the top of the box for demand zones. For supply zones, will be on the bottom of the box. So 110.78, 110.91 here, 110.10, 109.94. If you want to see both prices, you can see both prices on the edge of the box. So look in this demand zone, you see 109.40, and the bottom of the box is 109.32. The zone height is a very useful feature for risk and reward. Go ahead and hit apply. And you'll see that it says 77, but you have to, for Forex, you have to move it over a decimal point. So it's 7.7 pips, 8.2 pips, 4.1 pips, 4.5, 6.2 pips, 8.2 pips here, 6.2 pips, so on and so forth. But it's really useful because if you're taking a trade, you can see exactly how much you're going to have to risk if you're playing these supply or demand zones. Now, if you want an email every time a supply zone or demand zone is created, very important, you have to put your email in each of these boxes. Don't just put it in once, put it in all 3 times to get that email. Because what it does is when you put your email in there, it turns that feature on and sends that email. So very important, if you want that feature, put your email in all 3 boxes. Alert. If you want an audible alert when your price goes into a zone or creates a zone, or zone is created, go ahead and click on one of the alert wave files here, or whichever wave file that you like for demand and supply. And I'll go ahead and send you that audible alert. Once you're done, go ahead and hit OK, and you're all set and ready to go. Thank you for watching this video. I hope you found that helpful, and happy trading.